Hey, what's up, guys? Welcome back to another episode of Filling Your Cup. I'm your host, David.
I'm your other host, Calvin. What's going on, everybody? And today we're going to talk about part two of what drives the market. Okay, so earnings. So earnings is one of the metric that we investors and stockholders look at to see what drives the market. So earnings, especially earnings per share, which is a company's net income or earnings divided by the number of common shares outstanding. EPS, or earning per share, shows how much a company earns for each share, with a higher EPS indicating the stock has higher value when compared to others in its industry. Okay, corporations are required to report quarterly results, but EPS tends to get the most attention from investors, particularly from when the EPS either beats, matches, or misses what stock analyst has been forecasting. So it's the higher the profit, higher the EPS, which is a good thing. So one stock in particular that I've been invested in is Bed Bath & Beyond. So pre-Rona times, this stock has been beaten down, trending down. I saw an opportunity there. I had to get in, an opportunity I couldn't miss. So I got in, knowing during COVID times, knowing that they're going to transition to more into e-commerce. More and more people are buying online, and more people are shopping online. From Amazon, from Peloton, everything. So hopped on it. Quarterly earnings Q2 or Q3 reflected and supported my bullish thesis, and they went up. So got in at pre earnings, it was trending around $14-15, and post earnings now it basically doubled. So went up to 20. Now I think the last trading days around 25. So and at the time of this recording, so huge upside post earnings that drove the stock price up and up and up. And that's one of the examples of how earnings can drive the stock price up in a good way, in a positive way.
Yeah, so like what Calvin's saying, I guess it's like, so if you believe in something, right? If you believe in a company, the kind of like the earnings is kind of like what proves your belief. So Calvin believed that Bed Bath & Beyond was gonna do well because of COVID, and the last 2 quarters they've been killing it. So that's why the stock actually recovered from a low of like around $4 to right now to $25, and it's because of the transitioning from brick and mortar retailing to more e-commerce space, and it's easier to sell online because people just hit buy, and people don't want to. Right now, over COVID, they don't want to go outside to go buy the goods because no one's trying to get COVID out there. So that's one example of a company who has good earnings, and then they get rewarded, right? So my example is the HELE of Troy. I didn't know this was an actual stock when I read into it. When I saw it was a HELE of Troy, I was like, damn, what is this like Ponzi scheme right here? But it's an actual company. So how I found this company is that after HELE of Troy, or HELE, released the earnings, they actually killed the earnings, right? They had 3.77 per share, beating the estimate of 29. So that was a major beat right there. And then compared to like previous quarters, like I think they're up substantially. So they've been killing it in the quarters, but then for some reason, after hours, when after earnings, the stock got beaten down, and I think it's because that the company didn't give good guidance, or they didn't give any guidance at all. So the investors kind of felt that like if you don't give a guidance of what you think the future holds, it's kind of like a lot of uncertainty, right? So that's why the stock actually sold off after hours. So I was just kind of like browsing around, and actually when I was just like browsing around, and I just kind of looked at the most active stock for the day, and actually I just saw that this was the most active stock, and then I saw that it dipped like almost 10%, and I was like, whoa, this thing dipped 10% over really good earnings. I think is a little is overselling and is exaggerated. So I kind of dipped in. I got in around like 189 ish after hours, and then the next day, the next I think the week or two, it recover back to like 203, 204, and right now it's trading at like 207 actually. So this is like almost like 4 weeks later. So yeah, so this is kind of like example of stock can have a really good earnings, but because maybe they don't give guidance, or if guidance is really light, then the investors are they're you know they're anxious. They don't want to if they don't think the party's gonna continue, then sometimes they might just like, hey, I'm just gonna take my profits, or I'm just gonna get out. But then like also like but then like for these are like the perfect time to invest also, right? Because Warren Buffett always says buy when everybody is fearful and sell when everybody's is happy, basically. And they had a killer earnings, so I don't see why they had a killer earnings, and the only reason it dipped is because of no guidance. So I felt like it's like this screaming at me like a buying opportunity, because the company itself, it makes money. It's not like they're not saddled with debt. They make money, and they make money every quarter. So I think this was like a sure win. And then I took a chance. It was down 10%. I bought it, and now I'm up 10%. So I'm not saying this is always gonna work, but then if you're buying like good companies, it's usually it will recover. I mean, if it's like if it sells off, you know, or before earnings, or you know after earnings, you know, usually it does recover if it's a solid company. Another example, Adobe before earnings, it was trading around like $500, and then after earnings, it's not only earnings, like after earnings, and then I think like the whole week, it was just bad for this whole stock market, right? Because everything dipped. I think it was last week, right? Was it 2 weeks ago? Like the whole market just dipped for like a whole week. That didn't help Adobe's case, but then so it dipped from like 500 to like around 460, and I was like, hey, dude, Adobe is a really good company. I mean, everybody uses Adobe PDF basically. I mean, everybody uses that. So I bought in around 460, and right now I think it's around like almost like $500. I guess our theory, our case is what we're trying to say is, you know, buy the dips of really good companies, because it usually does rebound. And for me, I don't know if I'm gonna hold Adobe long term, but I think it's a good hold right now, because there's no other cheap opportunities, because if you want to sell if you want to sell a position that's really strong, it has to be because, one, for a better opportunity, or two, because you have a magic crystal ball, and you can tell that the market's gonna dip, and you're just trying to get out before everybody else. So yeah, those are two examples that we have. So you want to add anything else, Calvin?
Yeah, so you know, just because a company have good earnings, and you also have, like I said before, that's just one metric that guides the stock price. So you also have to look at, for example, the social climate. For example, we're in election year right now, so volatility is expected. So you know, take other factors into consideration as well. Yeah.
Makes sense. And yeah, and a segue from that is that election is coming up right around the corner, and usually during election time, stock tends to tank or dip. So I'm gonna watch my portfolio pretty closely these upcoming weeks, and then I might just sell some of my positions, like maybe like I sell Adobe, sell a Roku, some of these other positions, just to just have a little nest egg in case if it dips, and I can just get in there on the low, and then if it doesn't dip, honestly, corrections are bound to happen, and then usually it will always happen. Correction will always happen. So if you miss the boat on a transaction, don't worry about it. You know, just give it some time. It usually does correct itself, and especially right now when there's high volatility, I'm pretty sure you can guarantee that a correction will happen. So I guess our tip is to just earnings is a potential play if you want to buy stocks, and then don't be alarmed if a stock just look out for buying opportunities, right? If you don't have stocks that you want to buy, earnings is a really good time to load up on these stocks because one, they could have really good earnings, but then because of guidance, the stock can dip, and that's a buying opportunity right there. If they are a good company, that is a buying opportunity. So, an example like the Adobe, it dipped from 500 to 460. That's a buying opportunity. I mean, you can always also argue that these stocks are overvaluated, right? Like these stocks aren't worth $500 to begin with. That's an argument that you can make. But in our current environment, there's like so much stimulus money coming in. There's just a lot of money flooding into the stock market. So I think I think there has potential to run higher, but it is election time and it is a high volatility, and I'm not surprised if the whole market, dips like 20-30% depending on the results of this election, because I think the market favors one president more than the other. I'm not gonna say who, but let's just say that if you yeah, I'm saying just watch it closely. Like, I mean, just say if they I think I'm just gonna spoil a secret, right? I think the Trump favors the market. So if Mr. President Trump continues 4 more years, I think the market is gonna, hold or even go higher. And I think if Mr. Joe Biden wins, then there could be a correction, and I think the market is gonna dip. That's kind of my feeling on it. But like I said, I'm gonna keep a close watch these upcoming weeks to see what's cracking, and yeah, and then I'll catch you guys next time in the next video. I mean, like always, please like, comment, and subscribe. Let us know how we can do better. And next week we're gonna do our monthly portfolio update. So I don't know how much transaction you had in your portfolio, Calvin, the last month, but I think I had a few. I think I have a couple. So we're just gonna go over that and see how we're performing. The goal is not to make money every month, but it's kind of like if you are buying or selling positions, the goal is to just make sure, like, just try to make some money. If you are buying and selling, hopefully you're not just losing money and you're making money. So, and we're here to, like, we're like novice when it comes to like trading, because it's hard. But yeah, it's kind of like a journey that we want to share with you guys because we want to get better at this. So until next time, stay safe and stay green, bro. Gotta make money.
Okay,